In our next panel, the role of cyber insurance on improving global cybersecurity, we'll have another great synergy of both private and public sector perspectives. I'm pleased to introduce our distinguished speakers. Michael Atkinson, a partner at Crowell & Moring LLP in Washington, D.C., where he co-leads the National Security Practice Group. Previously, Michael was the presidentially appointed and Senate-confirmed Inspector General of the United States Intelligence Community. Catherine is an enterprise client leader with Aon's Enterprise Client Group, structuring solutions for key clients to enable their global strategies around all aspects of the business. She joined Aon in 2017 as global co-head of the Cyber for Aon's Reinsurance Solutions. Joe is a managing director and is currently head of cyber technology and information security risk management for Morgan Stanley U.S. Banks. Please welcome each of our panelists as they bring together their expertise in a conversation moderated by Yosha DeLong, the global head of cyber at Mosaic Insurance.
Thank you so much. Well, I'm really excited to have a discussion around one of my favorite topics, which is cyber insurance. And all the things that come into play in that. The cybercrime area is expected to reach 10.5 trillion US dollars this year. We continue to see ransomware attacks, privacy events, and events of all types impacting businesses. There's still a stat that says 60% of small businesses go out of business after a cyber event. And that's just terrifying. But one of the backstops that exists is the cyber insurance world. And I don't think a lot of people are that familiar with cyber insurance and the role that we play in the economy. And so, Catherine, I'm going to kick it off with you. It would be great if you could provide a brief overview on what cyber insurance does, what's covered, what's not covered, and what are the biggest concerns going on right now in the world around accumulation and large-scale events?
Yeah, thanks, Yosha, and grateful to see everybody here. And I just can put in a little plug for the insurance industry. If you're thinking about where do I take all this knowledge I'm gaining at GW, we're here. So the cyber insurance space really evolved in the late 90s out of business kind of problems that can evolve that will impact your bottom line. And so we have what's called first-party coverages. So for example, if you are a business and you're hit by a privacy or security event, you're going to incur costs to recover from that. So you might have a situation where you have to hire a forensics firm to come in and figure out what happened, how to clean it up. You might need a specialty attorney to come in and help with things like notifications and all the costs of that. It can even pick up business interruption costs. So you might have a problem where your supply chain is disrupted, and there potentially can be some cover for that, things like ransomware costs. So that's all of the implications for your business. But then you also might have liability. What happens if you have a privacy or security event and now you're responsible for problems that were caused to somebody else's business? So the policies are meant to respond to those kind of problems, keep your bottom line stable. So when Yosha's mentioning 60% of businesses can go out of business, this is where the insurance policy comes in. So that's at the individual company level. And so Yosha's asking questions about what's not covered and things like accumulation and aggregation. So what does that mean? At the portfolio level, let's think about it in terms of a hurricane coming up the Florida coast. So you might have a situation where the hurricane kind of glances the coast and knocks down a couple of buildings. That's a bad day for the building owners and the businesses there, but not a huge problem for the insurance industry overall. But what if the hurricane comes up the west coast and then goes across the whole state and takes down a whole bunch of buildings? Same kind of thing can happen in the interconnected world of cyber, right? So we have situations where you might have a mass cloud outage or a significant ransomware attack, or rather a significant malware attack. So now you have a problem where lots of companies are going down all at the same time. Now, if you are an insurer and you have policies for every single one of those businesses, it's a really bad day, just like if the hurricane goes across Florida. So What's happening in the insurance industry is that we're trying to think through two areas that are a problem. One is where I would say we're undercapitalized, or where capacity, the demand is bumping up against the available capacity. So this would be this catastrophic potential where somebody like Mosaic Insurance and Yosh's team would think about, okay, I want to be able to offer significant limits for something like a major malware attack, but I have to get enough reinsurance and capital support to enable me to do that so I don't bring down the whole company, right? So that's part of the problem. Insurers and reinsurers are looking at how to model it and how to bring solutions to that problem and get more capital to bear. Then there's the issue of what's not covered at all, and that would be things like infrastructure and war, and we'll hear a little bit about cyber war later today, I think, so that's going to be additive to this discussion. The problem there is that those things aren't really in an individual company's control. And it's not modelable by the insurance industry. So this is where the public-private partnership comes in, as we're thinking about federal backstops and other solutions in partnership with Treasury. So those are some of the problems that we're trying to solve for. That's the insurance industry in 4 minutes.
Give them all their degrees.
Everyone, it's more than you wanted, I'm sure. But
No, I think that was great, and that was a great overview of some of the problems we're facing right now and also the opportunities and solutions that the industry is providing. Joe, you have an interesting role in the information security side. What is the role of cyber insurance in your risk management program? And then how does cyber insurance change your capital needs and the large-scale implications on the economy in general?
Yeah, it's an interesting question because one of the fundamental challenges we have is answering the question, how much insurance should you buy? And the real challenge of that is, how do you measure cyber risk? It's something that we struggle with a little bit. You know, cyber risk is really, it's a problem of trying to estimate two things, probability and impact. And cyber in particular, any risk is really. Cyber in particular is particularly pernicious because when you look at the impact side of the equation, we think of cyber as a pathway to many bad things that can happen. You could have a Bank of Bangladesh theft of funds. You could have, a Saudi Aramco cyber-enabled business disruption. There are too many examples of cyber-enabled theft of information, and all of those have different sort of impacts on the firm. We've gotten pretty good at enumerating those, and we've gotten pretty good at estimating the potential losses of those, but the second side of the equation gets really hard, which is, the frequency or the probability of that happening. That's a difficult problem. And because we have trouble with that, we have trouble actually estimating the risk overall. And so that has a lot of impacts, and I'll get to the question about impact on the economy and impact on cyber insurance. So first of all, how much should you buy? You can buy too much, or you can buy too little, or you can get it just right. The second question you ask, for example, is, how much should we invest in our cybersecurity controls? How much is sufficient to mitigate the risk? If you overinvest, that takes money that you could otherwise put to good use, and you're putting into something that you don't really need. If you underinvest, in the extremis, it becomes a safety and soundness issue. The third area you might look at is around capital. So, the Dodd-Frank Act stress testing, CCAR is the Comprehensive Capital Analysis and Review Program, requires all financial institutions to sort of look at how much capital they should hold. How much cash do you hold in reserve if something goes wrong? And so obviously, we're supposed to look at all sorts of scenarios, but cyber is one that financial institutions would look at seriously. Again, if you overestimate the potential impact, now you're holding capital that could otherwise be put to use. And so, collectively, when you look at this, if you are overestimating the risk, you could have substantial resources that could otherwise be used, and this is the impact on the economy piece. You have substantial resources that you're using to mitigate a risk that you've overestimated that could otherwise go to small business loans, could be invested in companies that could then, so, how much of an impact on the economy does that have? I don't know, but I think it's significant. Senator Dirksen said, billion here, billion there, and pretty soon it adds up to real money.
Yeah.
So it's interesting because Dean Marotra asked us, think about for the GWU, what are some problems where academia could really bring something to the table? I mean, this feels like an area where there could be a lot. So insurance is critical. You want to have it. We know that this is a risk. It's idiosyncratic. How much? But the question is, how much should we have?
Yeah, that's where we need to focus our efforts right now, right? Yes. Michael, shifting to you, you've had a career in national security and academia. How do you see public-private partnerships playing into this dialogue?
Well, I think it has a really important part. But first of all, thank you so much for having me here. It's always nice to be back on the GW campus. I teach a class in the law school at 6 to 8 at night, so it's nice to be here before noon. So thank you for this invitation. So when you think about cyber risk in the national security context, the defenders will always be at a disadvantage, and that's because the defenders of cybersecurity risk have to defend the entire fort, the perimeter as well as the interior, whereas the attacker only has to find a single vulnerability to exploit that vulnerability. And then in the national security context, defenders are doubly disadvantaged because most public or private companies or organizations do not have the resources to battle fairly with a really sophisticated nation state, like a China, a Russia, an Iran, or a North Korea. And so that's why one thing that's critical when it comes to evaluating cyber risk and dealing with cyber risk is information sharing. I know that the panel who was just out here before us had a really nice discussion about public-private partnerships when it comes to information sharing. Let me just give you my perspective very quickly. When I joined the National Security Division at the Department of Justice in 2016, the Cybersecurity Information Sharing Act had just passed the year before. And we were trying at the Department of Justice to encourage companies, particularly those in critical infrastructure, to share their cybersecurity vulnerability information so that we, as the government, could aggregate it and be much more efficient and effective at defending our nation against these adversarial threats. And what we found was that companies were initially very willing to share, but they were critical of the government for not sharing information back. Like it was basically sort of a one-way street with information sharing. And then when I became the Inspector General of the Intelligence Community in 2018, one of the first projects I undertook was, hey, let's see how the intelligence community is actually sharing cybersecurity information. Because what I saw at DOJ was companies complaining, let me test that here now that I'm inside the intelligence community and see how the intelligence community in particular is sharing information, particularly on cybersecurity risk. What we found was that the government, the intelligence community in particular, was doing a pretty good job, but there were ways to improve that information sharing. And the federal government has gotten better. Since joining private practice, we've seen in the last 2 years, I joined private practice right at the wave of the ransomware attacks. And the ransomware attacks have really sort of just been sort of a jet engine to information sharing. Again, because of how damaging those cybersecurity attacks were to our critical infrastructure. And so you're seeing now just not voluntary sharing of information, but more mandatory disclosure of information. And I would expect to see more mandatory disclosures of cybersecurity information, particularly when it comes to cybersecurity risks that we might see in advanced technologies. So I would see more information sharing there. And then just the last point is, we talk about public-private partnerships, which are very important, but there are public-public partnerships. Yeah. And the US government has very good information sharing when it comes to working with our allies in terms of cybersecurity risks. So that's another reason to cooperate with the government in these types of battles, if you will, because the government just has tremendous resources and information to battle back fairly in a way that protects our national security.
And if I can build on what Michael is saying in terms of the insurance sector and why this information sharing is so important, myself and my colleagues in the industry have been working since 2015 on how this information that Michael's talking about could help support the modeling of risks, because with good modeling, we can get to the issues that Joe was talking about, really benchmarking what kind of insurance limits are needed for an individual enterprise, or if you're Yosha and you're managing a whole portfolio, what can I actually put together in a reasonable way? And why that matters overall is for the entire economy. So there are things like improving the underwriting process. So how can we have a conversation with Joe and say, share with us how you're managing your organization overall, and how can we differentiate the insurance that's available to you, both in terms of the breadth of coverage, the amount of limit that's available, and the pricing, and making it as nuanced as possible according to individual company and across a whole industry sector. So this kind of thing matters, and some of the recommendations over the years have unfortunately been a little too static. You know, well, can we take this information and then every insurance underwriter just becomes certified? Well, certified in what? And if I do that today, then does that even matter tomorrow? We need something where the information is more dynamic, so as the risks evolve, the underwriters and the actuaries can respond in a meaningful way in terms of what's actually available.
I think that's such a good point. We recently had a roundtable at the U.S. Chamber of Commerce around sharing information. And the other interesting thing I think that the insurance community brings to this is we're on the ground for our insureds when these events happen. And we're very active, involved with the incident response teams. And sometimes we have a view that's almost more than what law enforcement has from that. And we can start to track the activity of specific bad actors and really start to see patterns in that with particular industries. So if we can start sharing that information with law enforcement, with policymakers, and start to look at where these patterns are, we can start to direct the efforts and start to direct our insureds and critical infrastructure clients to where they need to start placing their efforts as well. So I do think that's an important key point in the growth of this involvement in the economy and prevention. I'm going to pivot a little bit here. By the way, we're getting some really good questions, so I hope to get to a couple of them and keep them coming. I want to discuss the role of AI in cybersecurity, and I'm going to give each of you a role to play in this discussion. So, Catherine, I want you to just touch briefly on the role of AI in underwriting cyber risk. Joe, I'd like you to chime in on the role of AI in measuring cyber risk and prevention of attacks. And then, Michael, I'd love for you to discuss the role of AI utilizing bad actors. So, going to let Catherine kick it off, and we'll go from there.
Thank you. So first of all, insurers, what they're doing is they're gathering information from somebody like Joe and saying, well, tell me about how you manage your organization. And it's a little clunky to think about somebody like Joe having to look at an insurance application, and does that really capture everything that's happening in his organization and everything that they're doing? Probably not. So it becomes an ongoing discussion. So you can imagine how AI could take reams of information and get better at predicting trends in terms of a threat vector for whether an individual company or across whole industry segments. And then that ties into what I was suggesting before about more nuanced pricing, which so far it's still kind of broad brush, where you get an overall score and then you have debits and credits associated with what you're doing as an individual enterprise. But can we get more nuanced about that? That creates a better economic proposal for everybody. So then somebody like Joe, I keep picking on you, can go to your leadership team and say, okay, this is why I'm recommending this kind of insurance transaction. This is why it's a fit for what we are doing and what our balance sheet needs are.
That's great. And Joe, how do you see the role of AI in the prevention of attacks and measuring cyber risk? So,
speculating a bit because we're just at the beginning of the hockey stick here. So I think a couple things. I think, I talked earlier about the challenge of measuring cyber risk, and one of the reasons it's a real challenge is because it's a combinatorial problem. You have an institution that has 50,000, 100,000 servers. Some subset of them are connected to the internet. Bad guy phishes somebody, lands on a box, and their goal is to steal data. So they have to move laterally through the network in order to get to their target. And there are lots of ways to do that. And so trying to anticipate in advance all the different ways, all the different attack paths that someone could take is just, it's a problem that we don't know how to address today. You know, in particular, what's pernicious about bad guys is their job is to impart technological and operational surprise on their targets. And so they do that by taking advantage of fleeting opportunities. They may notice something you don't notice, et cetera. And finding those things is very human intensive. You know, I see a role for AI eventually, hopefully sooner rather than later, of automating a lot of those activities. Sort of that expert knowledge, learning from that, and you know, one of the things we've heard very clearly is how AI can learn and learn what it needs to learn. That starts to get very exciting because I don't think it's ever going to lead to less people in cybersecurity. They're going to focus on different things. You know, there are things that only people can do. But the ability to sort of simulate within your environment what could happen, where are the cracks that you don't see, what are the anomalies, that gets really interesting. So we'll see where it goes, and I think Michael's going to talk about the adversary's advantage.
Yes.
It's the same thing, speed and scale.
Yeah, robots fighting robots.
Yeah. Robots fighting robots.
Yes, that's where we're headed, if we're not already there. Today, which is not much different than when I began as the Inspector General of the Intelligence Community in 2018, the AI capabilities greatly exceed oversight of AI and safety and security of AI. So in 2018, when I took on that role as the Inspector General, I suddenly became responsible for overseeing all of the artificial intelligence programs and operations in the United States intelligence community. And I'm not a math major, I'm not a computer scientist or a data scientist. And it was quite daunting because at that point in 2018, there really weren't even ethical principles, there weren't ethical frameworks in place. The intelligence community was working very quickly and furiously to push those out. And they're now out. We have ethical principles, we have ethical frameworks. We don't really have federal regulations, and we don't really have federal statutes addressing AI risks, particularly when it comes to cybersecurity. And right now, the advantage is clearly for attackers when it comes to using AI to search out cyber vulnerabilities. When you think about all of the hacks that have happened in the past 10 or 15 years with software, those were done without AI, right? And they're very, very effective hacks to cause tremendous damage. The reality is that with artificial intelligence, those risks have magnified. And the capabilities, again, the AI capabilities, we are at a hockey stick in terms of AI capabilities. In terms of AI safety, particularly when it comes to cybersecurity, we are at the flat end of the hockey stick. We really need to catch up. And so I think that's why, in part, you saw a letter a couple weeks ago encouraging a sort of a pause on artificial intelligence development. And say what you will about the pause, but one thing we do really need to emphasize and really make a much higher priority is spending resources to get the safety and security, particularly cybersecurity, of these artificial intelligence programs right, and we have to do that very, very quickly.
Yeah, I think one of the panels addressed it earlier. The idea of being a hacker is so much easier now with a lot of these tools. They don't need the high level of skills that have been needed in the past. There's a whole ecosystem around them. And so we've got to have that on the counter side as well.
Right. I do think there'll become a day when it'll become harder to be a hacker because hopefully the AI programs defending will be much more effective than the humans that have been defending against cyber vulnerabilities. But right now, the advantage, I believe, is very much in the favor of the attacker.
Yeah. Speaking of ethics, a couple years ago, there was an article that came out that said that there was a belief that the insurance community was actually fueling ransomware, that by paying and responding to these ransomware events, we were fueling the frequency of it. And then a couple years later, law enforcement came and had a conversation with us and said, actually, we think that the insurance community is helping pushing security controls forward and actually helping prevent some of these ransomware. So I'd love to know what you guys think about ethics, cyber insurance, and AI involved in that. What are the challenges faced, and how are they being ethically remediated or addressed?
Let me just go first, because I know the least about this on insurance. But I do think insurance plays an important role in terms of encouraging companies to set the right safety and security standards for whatever AI programs they're going to deploy. The because there's going to come a time when people are going to want insurance for their AI programs. That day is now, or is here. And the insurance company, much like they did with cybersecurity, there was a time when companies really didn't have very effective cybersecurity defenses, and then suddenly the insurance companies came in and said, listen, if you want us to insure your cybersecurity, you are going to need to put in the right protocols. And I think hopefully we'll see the same thing with artificial intelligence and these advanced technologies, that if you want to deploy these AI programs and you want insurance to sit behind you and provide a financial net, if you will, then you're going to have to demonstrate to us that your AI is explainable, that it's interpretable, that it's safe, and that it's secure.
I'm sorry, next time remind me to bring a Claritin to DC in the springtime. That was a strategic mistake. Excuse me. Building on what you said before, Yosha, we have actually seen a correlation of a decrease in the ransomware losses for the insurance industry because of this collaboration and pushing out of better controls and requirements. So that's actually something that has improved the performance of the insurance overall. I do think that we have seen examples where bad guys have targeted insurance companies' portfolios to say, hey, let me find out which companies buy insurance, and do we have evidence that this is like a big trend across the industry? I don't think so, but there are examples where that has happened, where the bad guys have said, we've got a copy of your insurance policy because we busted into this insurance company. So I think that there's a chance for the AI to do some better predictive testing out those anomalies and making sure that doesn't happen. But that potential for the misuse of the data is there. So that's an example of where that could happen. However, I will say, speaking of moral hazard, sometimes people bring that up with cyber insurance. They say, well, like, maybe I'll just buy insurance and then I don't have to do anything about my cybersecurity. I literally have never seen a company do that, but somebody always wants to talk to me about moral hazard. So I'll just mention that I think AI can help mitigate if there is a problem with that. You're not going to be able to lie on your application. You know, not that I think that people are really actually doing that, but it will just be another kind of way of shoring up the underwriting process to make sure that we're very clear on what those controls are.
Yep. Joe, anything to add?
I mean, it's not something I've given a lot of thought to because this is so new, but one of the things that does occur to me is the more you rely on machines to make decisions, the question then becomes is who's accountable if those machines make a bad decision? Mm-hmm. You know, and at what point are you supposed to, I mean, again, the thing that's really fascinating about these technologies is how unpredictable they are, including going crazy, right? Like you've seen ChatGPT go a little nuts. The question then becomes is if you are relying on that technology to make specific critical decisions in your network, you know, and it makes a bad decision, you know, from an insurance perspective, you know, how would you guys look at that?
Yeah.
You know, would you say you didn't have sufficient controls in place to test the technology that you were now delegating decision authority to? I think it opens up a whole new world because today you can look at people who are accountable. You can say it's the CISO or whomever.
I'm still worried more about Bob and payroll than I am about the machines making mistakes. Yeah. It's still going to be the people. And I see the role of AI as really being something that helps human behavior behave better as well as humans helping machines behave better. If we can correlate those things and pull them together, I think that'd be great. We've got a ton of questions. We're not going to be able to get to all of them. What I encourage you, I'm going to be here all day. A lot of our panelists are going to be here all day. Please find us, ask the question if we didn't answer your question. But I think considering where we're at here at GW, higher ed has had a long tradition of securing systems to create a more open environment and encourage people to be more sharing. What we've seen is very big attacks on the higher ed environment. There's challenges in getting cyber insurance for this particular industry. In the last minute we have left, what do you guys see for the future of higher ed and cybersecurity?
Oh, look, Michael. I think some of those problems that I articulated earlier in terms of finding a way of building out the insurance industry, we may be boring, but we're the background to everything that we're the backbone of everything that happens, because we're providing that economic support for the economy overall and the financial balance sheets of companies overall. So it's important that we have a way of figuring out, can we build enough capacity so somebody like Joe can say, hey, I need another $100 million or $500 million in limits. Is that something that as an industry we're going to be able to respond to? What about these emerging threats? Cyber war is a whole topic we're going to have later today. Can we find a way of ensuring some of these problems? And I think that there's a lot of thinking going on here in terms of public policy, economists thinking about it, and so there's a lot of potential to bring all this thinking together.
Great, thank you. Yeah.
I'll quickly say the one thing I think that academia really brings is the luxury and the time to do pure research.
Yes.
And solve problems that, frankly, in industry, we'd love to put time against, but the operational imperative of running a business or running a function day to day gets in the way of.
I love the luxury of time. I'd love to have that. Thank you, panelists. Thank you so much for your time. Thank all of you for attending.